The chip state of play is just one that's a huge focus given its significance in that technology trade overall. Just how important is that tech trade, and is it going to be reliant on computer chips and AMD and NVIDIA, especially with NVIDIA earnings coming up later on this month?
Good morning, Dom. The chips, no doubt, are a big part of the market move that we've been seeing recently. I mean, since the April lows, it's really been technology driving the market, and a lot of that has been chips and NVIDIA specifically, and really all the mega caps. And this AI trade has really been a huge tailwind for the markets. And so making sure that we're making progress and moving in a positive direction. Any volatility around this, any difficulty with China, we will see more volatility in those names, but I still think that there's a good tailwind for this sector.
The tailwind for the sector is also reliant on macro factors as well, aside from just the trade and tariff policy discussion. How much has the economic data that you've been seeing reinforced the idea that perhaps we are either in a slowdown that's brewing or are perhaps not going to see a slowdown anytime soon? And how much of that is important for that tech trade?
There is some slowdown. It's hard to ignore that there has been some softness in some of the reports we've been seeing coming out. I mean, the labor market specifically most recently, and in some other areas as well. But as far as the mega cap tech trade goes, I mean, those companies are in a strong position. They're generating incredible cash flow. They're spending incredible amounts of capex. I mean, $95 billion is what we saw in the second quarter, with a lot more in the pipeline. And that will be a huge tailwind for supporting the economy and economic growth going forward as well.
The earnings season has shaped up better than some people had expected, better than consensus overall. But it has been, and this is like a broken record, it has been a certain handful of stocks that have been driving the vast majority of earnings growth within the S&P 500. Is that still a healthy dynamic? It has been for the better part of maybe 15 years. But that broadening out trade is one that maybe some folks say needs to start happening sometime soon.
That's a fair point. There is an incredible amount of concentration, and we have seen the largest companies really driving a lot of the earnings growth we're seeing. Even though earnings really have been strong across the board, we've seen really good strength, and expectations, were far below where we've seen the season actually play out. But I do think there was more expectation for broadening out to happen more quickly. But we are seeing productivity improving. We are seeing AI adoption more. We're still in the early stages of that adoption cycle, and it's happening quickly. And we do think that's going to have a huge impact on productivity and really help companies to improve their, drive down costs, improve their margins, and we'll see that filter down to earnings as well.